Hello and welcome to another KuLAB. My name is Ku. This is our laboratory for learning. And today we're going to be taking another look at business English, looking at a business article with lots of new interesting vocabulary words. We'll look at business context, and hopefully this video is useful for you as you spend time learning business English. So let's go ahead and jump right in. Today we're looking at an article called Opendoor is the market's latest meme stock. Proceed carefully. So this is talking about a specific stock, and I thought this was interesting because we'll be talking about the idea of meme stock. So a meme stock is a stock of a company that is public, that issues stock. But a meme stock is one that has gotten maybe valuable very quickly, and not particularly for financial incentives or financial reasons. So whether or not it's become popular on social media, whether there's been some movement on certain places, it often can cause a certain stock to go really big very quickly, and it's become sort of a meme online. So a lot of retail investors, or investors that are just normal people, not investment banks, will invest in a meme stock, and it'll make it go quite valuable very quickly. But of course, it can become not so valuable very quickly as well, because a lot of times the performance is not based on any sort of financial background. So that's why this article tells us to proceed carefully. Opendoor Technologies is emerging as the market's latest so-called meme stock, a term used to describe GameStop before and AMC Entertainment during the explosion of retail investor trading 4 years ago. So GameStop and AMC were former meme stocks, very similar in nature. Shares of the San Francisco-based tech group that focuses on the stagnant real estate sector have nearly tripled in value over the past week. And influential investors' discussions of the company on social media appears to have triggered retail interest. So in this sentence, stagnant means not very viable anymore. It means it's kind of gone cold. There's not a lot of opportunity, not a lot of movement in something that is stagnant, sort of standing still. So this is describing the real estate sector. So not a lot of movement. People aren't buying and selling a lot of houses. And so this sector has kind of gone stagnant. This particular group has tripled in value over the past week. Let's see why. There's a reason that sounds familiar. GameStop, patient zero in the meme stock craze that began in January 2021, was a struggling stock with dying business model and a string of quarterly losses. So in this sentence, patient zero is usually used to describe like the first instance of something. It's often used when we talk about medical epidemics or like the pandemic. Patient zero was the first person to get a disease. So in this case, patient zero is sort of humorously referred to as the first stock to do this. And this was GameStop back in 2021. So moving on to Opendoor here. However, Opendoor may struggle to capture that sort of investor zeitgeist, even as its market value approaches $3.2 billion for the first time in more than a year, following an endorsement from activist investor Eric Jackson. So the key word in here is this idea of zeitgeist. Zeitgeist is a German word borrowed in English to sort of represent this idea of what's incredibly popular. And it's very similar to this idea of meme. It's like what's happening that everyone is talking about or everyone is doing at the time. So it sort of has taken over the zeitgeist. It means like the most powerful thing. It's a word that usually is describing something incredible happening or something that's capturing attention. Opendoor has been in steady decline ever since hitting a peak valuation of $20.6 billion in February of 2021, shortly after its merger with a special purpose acquisition company, Social Capital Head Sophia Holding Company. So this is basically saying Opendoor has been declining in sales, similar to the way GameStop was losing a lot of business until something weird happens and it became sort of a meme stock, like, oh, we should buy this. That isn't really a surprise, given Opendoor's focus on what's called the instant buyer market for home sellers, designed to speed up transactions and avoid realtor brokerage fees. So, realtor brokerage fees are just fees that a real estate agent might charge someone when they're buying or selling a house. So Opendoor's policy or their business model is letting AI algorithmically appraise your house or appraise a house, and then letting you go through transactions a little bit easier and to avoid these types of fees. It was a sort of a big craze in 2021, 2022, but most real estate appraising companies who sort of adopted this idea went out of business or closed that part of their business because there was a lot of problems, a lot of issues with it. So this may be related to the AI sort of boom, but again, this idea of it being a meme stock isn't quite, there isn't a lot of information about it. Existing home sales have fallen by nearly 50% since the group went public in late 2020 and were last estimated by the National Association of Realtors at an annual rate of 4.03 million in May, the lowest since 2009. So this is home sales have fallen to their lowest since 2009. So almost a little over a decade. High mortgage rates that discourage buyers are also locking sellers in their current homes. A Bankrate survey published last week showed more than half of U.S. homeowners wouldn't feel comfortable either buying or selling a new home based on prevailing 30-year rates, which the Mortgage Bankers Association pegs at 6.82%. So this is basically saying more than half, so above 50% of U.S. homeowners are not really comfortable buying or selling a new home at this rate. Okay, so nearly 7%, right? So they're just either keeping their homes or waiting for something better to happen. And so the real estate market has gone stagnant, at least in the United States. So this is a United States stock. And so this is something that is intriguing because a company that is based on real estate usually shouldn't be seeing the kind of growth that this company Opendoor is seeing. Other investors are lining up to bet against Opendoor's recent surge. Short sellers bet against a company by borrowing shares and selling them. If the price of the stock declines, the short sellers will buy back the shares at a lower price, return the borrowed stock while paying a fee, and pocket the difference. So this is the idea of short sellers. The main idea is that short sellers are people who think the stock is going to go lower. They're hoping that it reduces in value. They can borrow some stock at the high price, try to sell it, and then if it drops, they immediately buy that lower stock price and then sell the others or give the others back for a fee. But the difference between how high it is and how low they hope it goes gets them a lot of money. It's basically a group of people who think that it's not going to do well, and so they try to short it, meaning it's going to come up short. Wall Street pros argue that short sellers can help establish more accurate pricing and liquidity in stock markets. Critics say that they can damage companies and wipe out small investors. So this is saying that short sellers establish more accurate pricing. If we take a look at how many people think that this is going to fail, it can kind of give you an indication of what the actual price is. If a few people are saying, oh my gosh, this is very high price, this is very valuable, but a lot of people are saying, no, we're going to short this, it kind of gives you an indication of what the actual price might be. Critics of short sellers can say that they can cause some damage to companies by deflating their value. And oftentimes companies will go out of business if there's too much short selling going on. Short selling in and of itself is very, very risky stock maneuver. and is something that happens on the stock market but is very, very risky. So as we can see, this meme stock is growing quite well. It is, you can see for our graph here, it's kind of been trending down, then all of a sudden shoots up really, really high right here. So we can see that something is going on. It's becoming incredibly valuable very, very quickly. But there is caution in the fact that there's a lot of short selling. And so this is something that we want to be very, very careful with. But a few interesting business concepts and some business English words that are quite useful. So again, hope you found this article interesting. We'll keep doing some of these business related breakdowns every few days so that you get a chance to spend some time here, learn about some business concepts, learn about some business English words that are used in actual business language journals, and that you can use to grow your business English skills. So join us again, hit the like and subscribe if you enjoyed it, and I'll see you in the next KuLAB.